Good morning, Bitcoiners, and welcome back to your economic calendar with the information you need to start the week off right in Bitcoin. Today is Tuesday, January 10th, and as always, I'm Mauricio Di Bartolomeo here at Ledn. And we have a great episode for you this week as everyone is back at it, and we have a packed week with economic data and potentially market moving events. This week and in this issue, we're going to focus on the current rally that we're seeing in Bitcoin and what might be the reason behind that. For that, we're going to look at what the Dixie is, which you'll find out soon. And we're also going to talk about a new inflation reading in the US, which we get for the month of December, and that comes out later this week on Thursday. We're also getting Fed speeches are back with Jerome Powell and company doing their thing during the week. And last but certainly not least, we have the start of Q4 earnings season for US equities, which should introduce some volatility to markets in the weeks to come. So without further ado, let's get into today's show. And before we start with today's analysis, let's take a look at Bitcoin's price performance over the last week. We see here that Bitcoin was up 3.09% last week. So far this week, up 1.2%. And we're also seeing rallies in the broader markets with the S&P 500 up last week 1.2%. So far this week it is rallying as well. We're seeing similar moves on the NASDAQ. And as we discussed in today's show, we're going to focus a little bit about what could be driving these rallies in equities and as well as Bitcoin. And without further ado, let's get into today's show. And as a reminder, you can be the first ones to receive this video and all of the other insights that are included in our newsletter by subscribing to the newsletter at blog.ledn.io. So let's go on to Bitcoin and the Dixie. So to start, the price of a good is a function of the value of both of the items that are being exchanged. Most often in today's society, that exchange typically takes form of a type of money that is exchanged for a good or service. And over time, we have been conditioned to think that dollars are stable and that price fluctuations in goods or services are not necessarily a reflection of the value of the dollar itself, but rather a reflection of the changes in the perceived value of what is being exchanged. For example, when a home increases in value over 2 or 3 years, people don't intuitively think that the dollars in which the house is priced have become less valuable. They tend to attribute the changes in value or the price of the home to an increase in value of the house due to rising immigration or gentrification of the neighborhood or whatever else you want to reason to yourself is why the house went up in price. In reality, the change in price of the home is a function of both of the changes in the value of the dollars themselves in which the house is priced and the changes in value of the house itself. People that grew up in an inflationary economy or market like myself have learned forcefully that a good can go up in price astronomically in one currency while at the same time dropping in price when priced in a different currency. We learned that the price of your currency can change faster than the price of a good or service. And therefore, we think of prices as an incredibly dynamic concept. Now, as an investor, it is very important to discern the changes in value of the currencies as much as the changes in value of the goods and services to reach the right conclusions. We'll show you why this matters and how it relates to Bitcoin with the following example. First, we're going to explain what the Dixie is. And for that, we're going to pop up this website here. Now, the Dixie is the US dollar index, stock ticker DXY, and it is informally known as the Dixie because of the ticker. And it is used to measure the value of the dollar against a basket of 6 foreign currencies. And these 6 foreign currencies are the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the British pound, and the Swedish krona. Now, since October of 2022, the US dollar index, the Dixie, has dropped by more than 8%. Let's take a look at that here. And here you can see the drop over the last 3 months. So from here, let's take a look at it here. This is the start of October, so let's pin it from here. And as you can see, it's down more than 8%, or about 8%. Now, going back to the Dixie. So, as we've covered in the past, when the US dollar drops in value relative to other currencies, asset prices that are priced in US dollars tend to benefit. The chart that I'm about to show you shows the performance of several assets over the last 3 months, And we also show the same performance holding US dollars constant over the period. And here is the chart on your screen. Now, as you can see from the chart, and just to show you what we're doing here, this is the move in the US dollar since October 2022, and we basically controlled every other asset return by effectively adding back the move in the US dollar, so effectively holding US dollar constant over the period, so we can see the returns of each asset when holding the US dollar constant. And this gives us a sort of clearer picture of the true performance of these assets. And as you can see from this chart, the move in the dollar, once we add it back, can make some asset moves look better off and can also make some asset moves look worse off. In the case of Bitcoin and cryptocurrencies, the US dollar index dropping has shouldered some of the pain and uncertainty that has been introduced by recent events, and it is likely playing a role in the current rally. For context, I'm going to show you the historical correlation between the US dollar index and Bitcoin prices over time, and that is right here. Now, as you can see, the inverse correlation between the US dollar index and Bitcoin prices are clear as water. When the index falls, Bitcoin rises. When the index rises, Bitcoin falls. Of course, there is a lot more that goes into calculating the price of an asset than just the numerator that it's priced in. But all things being equal, a cheaper dollar means a more expensive Bitcoin in dollar terms. Okay, now, then why is Bitcoin dropping when the US dollar index is also dropping, which is what we are seeing in the recent or the last few weeks? Well, the answer typically has something to do with risks or changes that are being experienced in that particular asset class and not in others. In the case of Bitcoin and crypto more broadly, there have been several forces, or there are several forces impacting this industry that are not present in other assets. And those would be the multiple multi-billion-dollar frauds and bankruptcies that have impacted millions of clients, the damaged investor morale and confidence, which stems from the first point that I just mentioned, potentially more bankruptcies to come. We can see DCG and Genesis, and regulators working overtime to create frameworks for the industry. And add on top of that, the negative media coverage. Now, the reasons above could serve to justify the negative performance of Bitcoin relative to the other assets mentioned. Similarly, when we look at US equities, they are facing the pressure of higher interest rates and a Federal Reserve that consistently reminds us that they do not like market rallies in this environment. This happened last week, the headline on your screen, which is basically Jerome Powell's words to the markets last week, or what came out in the minutes, is that big rallies will just prolong the pain. So they do not want to see rallies, as we've covered here amply. Now, the same pressures that I just mentioned are absent in the gold and copper markets. And these assets, by looking at these assets, we can better appreciate the tailwind that is the drop in value of the US dollar index. Just bringing this back to the chart, look at the performance of copper and gold even when controlling back for the US dollar. So again, we can very clearly see the tailwind that it's had on these two assets. However, the same tailwind is not, we haven't seen it in Bitcoin and equities. Now, as the Bitcoin industry heals from the factors that we mentioned above, Bitcoin should start trading closer to its inverse correlation with the US dollar index. Why is this important? Let's take a look at the US dollar index chart over time. So the chart on your screen is the historical performance of the US dollar index over time. And a few things that I wanted to highlight from this chart, and as you'll see, we'll go over these yellow boxes that we've highlighted. So first up, dating back to 1976, we can see that the US dollar index has been making lower highs, and these are the lower highs that I mean, and lower lows over time. So if you look at the lows have been getting lower and lower as time progresses, which basically works out to be on this blue trend line here that we've put together. The other thing that that is interesting from this chart to pop out is that every time we have seen a parabolic rise in the US dollar index, it has been followed by an equal or similar parabolic drop, returning to the original price before the rally. And these are the yellow boxes that we've highlighted: parabolic rise, parabolic drop, parabolic rise, parabolic drop, and the most recent parabolic rise is this one that we have seen so far. Now, as the Federal Reserve approaches its terminal interest rate, meaning that they don't plan to raise rates beyond that, investors are starting to think and position themselves in the opposite direction. Owning US Treasury bonds is great when rates are high, but risk assets historically perform better or have better returns when rates start to drop. Now, investors expect the Fed to reach its terminal rate later this year, and beyond that, many expect that they will start cutting interest rates. When it looks like we are approaching peak bonds moments, or the peak bonds moment, and this could bring more weakness to the US dollar, which could act as a tailwind to keep markets stable. And as always, we wrap up with what you can expect for the week ahead. Everyone's back at it, and this week will be packed with market-moving economic data and events. On the macro side, our beloved Fed speeches are back, with Jerome Powell headlining on Tuesday and 2 other Fed members during the week. On Thursday, we'll get a read at US inflation with CPI data for December, and the expectation here is for inflation to come in lower at 6.6% year over year, down from November's 7.1%. We will also get the US federal budget, which should start or kickstart a conversation about the debt ceiling debate, which we covered a few issues back. And last but certainly not least, we get the start of US equity season, earnings season rather, with financial giants like JP Morgan Chase, Bank of America, Wells Fargo, BlackRock, and more reporting on Friday. Details of that are below. Now, on the Bitcoin side, the stalemate continues with Genesis and the DCG saga and its creditors. Over the weekend, CoinDesk reported that the DCG conglomerate, which includes Genesis, is being probed by the Department of Justice, the United States Department of Justice, and this should most certainly put a wrinkle on any fundraising efforts by DCG. Here is the article that we're making reference to on your screen. Now, there is also momentum building around existing GBTC investors, Grayscale Bitcoin Trust investors, to allow the fund to redeem units for Bitcoin. For context, until now, investors could only buy units in the fund by converting Bitcoin to units, but the fund does not currently allow for those units to be converted back to Bitcoin and be withdrawn. A recent group formed by David Bailey called RedeemBTC.com has reportedly now rallied over 20% of GBTC investors together over the past 3 weeks, and it continues to grow. Now, while this situation may not get resolved imminently, it will continue to generate headlines that could move markets. Now, with that, we have reached the end of today's show. If you'd like to see the full details of all the economic data and announcements that we just mentioned, please make sure to check out our blog at blog.ledn.io. And you can also subscribe to our newsletter there and be the first one to get all of this video, this analysis. And we also have much more in the blog. We have an S&P section, DeFi section, a gold and a mining section as well, which goes into depth into the upcoming earnings. You also can see all of the details of the upcoming data on the blog as well. So thank you very much. Appreciate you listening as always. If you don't yet have a Ledn account, I welcome you to check us out at ledn.io. Please drop your comments and feedback in the comments section. And if you enjoyed it, I welcome you to like it, share, and subscribe to our channel. Thank you, everybody. Have a wonderful week and see you next time.